Yesterday, my classmate called me and said whole life insurance is a scam. This is why I agree with him. And during our conversation, I had to agree. I think 99% of insurance is a scam. There are a lot of bad actors in this space, and a lot of very popular people have commented on this. The waters start to get murky for really two main concepts. The first one is efficiency. Efficiency is how much capital you have access to right away. So hypothetically, if you put in 100K and you have access to 100K, that would be 100% efficiency. Typically, the end goal with infinite banking is to deploy capital rapidly into cash flowing assets and then have that cash flow pay off the interest that you take from your policy. But here's the thing, with most permanent insurance, the norm is to have a 0% liquidity or efficiency rate for the first 1 to 5 years. And I want to note here, the right policy design is going to be based on your goals and what you're trying to do and when. No policy is inherently terrible. It's all about your goals and what you're trying to do. But if my personal goal is to deploy capital rapidly and get into cash flowing assets, then that low efficiency policy design is not going to match the end state of what I'm trying to pursue. But you can see how things start to get confusing because, like I was saying, the norm is a low efficiency policy and a 0% efficiency rate for the first 1 to 5 years. The next friction point is what's called the chassis, or the specific product that you're working with. And there's really two main actors inside the permanent insurance space. The first one is whole life insurance, and the second one is an IUL, or indexed universal life. The main difference here centers around the cash value. So with whole life, you have certainties and guarantees baked into your actual cash value. With an IUL, your cash value is subject to change because it's tied to the market. So your cash value is going to be subject to change with the ups and downs of the market. People tend to get dogmatic on this point. And again, the right policy that's for you is going to be shaped on your goals and what you're trying to do and when. I found this concept really beneficial when I was trying to understand the difference between these two products in the layer of infinite banking. So if my goal is to rapidly deploy capital and my cash value is subject to change, that's kind of like building your warehouse of wealth on quicksand. When we were applying leverage, we want a safe, secure, stable foundation, i.e. whole life insurance. The waters could start to get really murky and perhaps a little bit too risky when we're applying leverage in an IUL in a rapid fashion when our goal is to deploy capital as quickly as you can. And then going a layer deeper into the commission space. So if an agent would sell you a low efficiency policy, so that's 0% liquidity for the first 1 to 5 years, that agent may make 1 to 6x more on commission by selling you that policy. So people can kind of be incentivized to take advantage of you, sell you a policy that's not matched with your end state and what you're trying to do and when, and then make a boatload more of commission on your policy. So addressing my friend's concerns again, I would agree 99% of insurance is a scam, but you could set these policies up in a very particular manner and you could absolutely use it to compound your generational growth.